Welcome back to Investing and Trading Live. As always, my name is Josh Lilquist, and we're having a good time in studio here today and just dissecting these financial markets. We always have a good time. The market's always moving, and we kind of kick the show off every single week. Well, the market was a great week. Well, it's always great because it's always moving. That's what you want it to do, is just move. And we do appreciate all the subscribers and the followers on the podcast. When you listen to Investing and Trading Live on Apple Podcasts, iHeartRadio, and Spotify. But also, congratulations to those of you that have taken that next step to learn the skills of trading and investing by coming to one of these investing classes. Simply to come into one of these classes, just text the word investing to the number 210, that's for 2 seats, to get on that journey of whatever that you're looking to accomplish in the financial markets. And it could be monetary, but it could be freedom of choices, freedom of time. Maybe it's leaving a legacy for your kids or grandkids. Whatever that goal or objective that you have, bring that in and have that kind of on the front runner of what you want to accomplish, and that will actually make you work for it, drive you to actually learn it, because it's a skill. Trading and investing is not knowledge; it's a skill that you build, and that's what we do here at the Academy: is train the skills and techniques and concepts in the markets. The great thing is we have a strategy that's already designed for that, so you don't have to reinvent the wheel. So simply text the word investing to the number 210 for 2 seats for that investing class. So Al, I want to just talk a little bit about how most people are put into portfolios and how we've been trained and conditioned to actually think what is actually good for us as investors. And you're put into a portfolio now, same way that they did in the 80s, 90s, 2000s, now the same way they've always done it. They're putting people in portfolios just to get money in the market and just hope that it works out. Now, let me illustrate this for you, and for those of you that are on the YouTube stream, you can see this on a chart, but just kind of hear me out here for a second. From 1980 to 2000, that's kind of the prime working years of baby boomers, and that's who has probably trained their kids and taught their kids how investing and trading or investing in the markets should be. Well, there was roughly a 1,200 to 1,300% rate of return in those 20 years. Which was phenomenal. You put money in the market, that's a pretty decent rate of return, 1,200%, we'll say.
Excellent.
Now, the next 20 years, from 2000, we'll say till now, 23 years, because of the numbers are so much higher in the market, that rate of return has only been about 200%. Now, think about that for a second. Over 20 years, it was up 200%, which is around 8-9%, which, it's not the best, but it's something, right? So now, as markets get higher, what happens is the rate of return gets much lower because the numbers are so high. And it's hard to understand that unless you see it on a price chart. But we're trained and conditioned to just put our money in there and hope it works out and time in the market. Well, there's a reason why you're put in the market for a long period of time, because there's a 4-letter F word in the industry. It's called fees, that brokers and advisors are collecting monies and getting assets under management to put in the market. That's how they get paid, regardless of the return that you're getting. So if you're being trained and conditioned to do a strategy which worked really well in the 80s, not as well in the early 2000s and mid-2000s till now, what does that actually look like for you moving forward? So you're putting money in the market at all-time highs with dwindling, there's that word again, returns. Now, there are ways to do that differently, Al. What are some of the things that you help people with to actually get them to understand how this actually works on a numbers basis, but making smarter investing decisions?
Yeah, well, let me comment on some of the things you just said there. From 1980 until 2000, the market was up about 1,200%. Pretty much anything worked during that time period. Yep. You could buy anything and hold on to it. That's where buy and hold became such a strong mantra of the Wall Street firms, and that's how it just continued. You mentioned fees. As long as you keep your money in your portfolio with the broker, they're going to be collecting fees from it. If you do really well, if you take your money out for any reason, the fees that they get go away. But what happened in the year 2000, that was kind of the peak after that 1,200% return. From that point on, which is what you showed there, we were up about 200%
roughly
from 2000. What if you had, but during that time period, there were two major market crashes. In the year 2000 until 2003, the S&P was down 50%. From late 2007 to early 2009, the market was down 57%. The people that bought into the buy and hold strategy, they kind of accepted the fact that they were just going to ride that out. Buckle up, ride it out because the market will come back.
And that's the terms you're taught and the terms you're trained to say.
Yeah. But what if instead of being down 50% and then down 57%, you had been up during those time periods? What would the difference have been? Instead of up 200%, you would have been up probably close to 3,000%. I'm not saying that if you follow our strategy, that's exactly what you would get. But we're showing you how to, as close as possible, time those turning points. So in 2000, when the market rolled over and went down 50%, there are strategies you could have used. You could have been positioned to benefit. The same thing in 2007, when the market rolled over and went down 57%. Not everybody lost money during that time period. The public, typically the retail trader, lost trillions of dollars.
If you Google the top top 10 trades of all time, 7 of them are in a down market.
Yeah, sometimes in a down market, we have some of the biggest one-day up moves that we ever have in the markets. It doesn't make any difference. You can look at a bear market, and within that bear market, there are short bull markets within it. But you can position yourself, number one, at the very least, when the market rolls over, and will it? Absolutely, it will at some point in time. We can't have this continued move up forever. There's going to be a pullback. So do you know how to protect your assets? So at the very least, if the market goes down 20, 30, 50%, can you protect your portfolio so you don't go down like that? There are strategies you can use that we talk to you about in these classes. Better yet, if the market goes down 20, 30, 40, 50%, what if you could be up maybe 10, 20, 30, 40, 50%? Because there are people that do that in every market crash. And they're doing it because they know the strategies to use. So not only do you need to know how to protect your assets, but understand what the assets and strategies are that will benefit you in a down market. Do you know what they are now? Number one, do you know how to protect your assets? Number two, do you know how to benefit in a down market? And for most people listening, the answer is probably no to both of those. By the time you're done with these 2-hour classes that Josh is talking about, you'll know what is available to be able to do that. And then if you want to learn how to kind of fine-tune that and really build the skills to use it, we can work with you on that too. Here, I think one of the interesting things, Josh, in addition to buy and hold, one of the things that Wall Street will tell you to do is you do a 60-40 split when you're growing your wealth. 60% in the stock market, 40% bonds. Then when you retire, they're telling you to stop using what worked to build your wealth and to change that into something different that's supposedly going to be a protective vehicle. But what it does, it eliminates the potential for you to continue to grow your assets. And maybe people say, well, but I have to be more risky then. No, you need to know how to manage the risk so you can benefit from things that have better returns while still protecting yourself and generating income off of your retirement money instead of dwindling it down.
Yeah, there's that word again. And basically what we're telling you here is we probably have one of the biggest opportunities of wealth creation that we will ever see in our lifetime. Potentially happening soon here. Because we know that there are strategies for down markets. Yeah, it could happen. This market could continue to go up. We know there's a strategy for that. So if this market continues to go up, there are ways to use supply and demand to buy stock at a discount even as it's going up. So not just buy at the high and hope it goes up higher. Why not buy when it's actually on sale and then sell it when it's expensive? So there's strategies to do that now. But there's also strategies, and you're seeing the signs with interest rates and all that stuff with potential, recessions down the road, which who knows if that happens. But if it does, that'll be another big wealth creation opportunity, probably the biggest one that we'll ever see in our lifetime, because now we're able to buy stock at a real discount. So these opportunities, it's all shown on a price chart. There's tools that we have access to as the public that we've never had before. We have so many new, great tools in the markets to utilize for our benefit. But if you don't know how to use them, or if you don't know what they are, then you're missing out on the whole train. You're missing the boat, and you're going to get left behind. I mean, you look at AI coming up. That's going to take so many jobs coming up.
Yes,
if you have a job that has anything to do with anything, AI is probably going to take it over. Trading and investing might be an opportunity so you don't have to have that happen to you. So I want to invite people to get into an investing class to see what your opportunities are so you're not stuck behind the 8 ball and you can have more choices in your life. Simply just text the word investing to the number 210-210 for a free investing class to see what these markets are all about and the opportunities that you might have moving forward with the markets. Al, we've talked a lot about different strategies and techniques here today. I want to hear today is OTA, tip of the week.
Well, you know, the majority of OTA students, of our Trading Academy students, in fact, over 70% of them say they wish they had started earlier. You know, you can avoid having to say that by starting now, by taking action. A lot of you might be thinking, you know what, I've missed the great opportunities, the big opportunities, it's too late. Look, we're in a global environment now that is going to be providing many, many more big opportunities. There's always going to be a bull market somewhere in something. And don't worry about being successful 100% of the time. You don't need to be. No one's going to be 100% successful all of the time, but if you don't try, you will be unsuccessful 100% of the time.
I like that. One of the first things you have to do is get started. If you want to make any changes or modifications in your life, especially financially, sometimes that's the hardest step. That's why we have a free investing class to introduce you to these techniques and concepts. Simply text the word investing to the number 210-210 for 2 seats. As always, same time, same place next week. Until then, retire young, my friends.